Did you know that a single Bitcoin, once worth less than a penny, has created more millionaires from scratch than nearly any other asset in human history? It's a staggering thought. Many people dismissed it as a fad, a bubble, or digital nonsense. Yet here we are in September 2025, and Bitcoin is not just surviving, it is thriving in ways that have silenced even its loudest critics. The journey has been a roller coaster of epic proportions filled with breathtaking highs and stomach-churning lows. Understanding this journey is the first step to understanding its immense potential. It's more than just a digital currency, it's a fundamental shift in how we perceive and interact with money. A decentralized force that continues to challenge the very foundations of traditional finance. The story of Bitcoin is one of resilience. It has weathered regulatory crackdowns, market crashes, and endless waves of skepticism. Each time it was declared dead, it roared back stronger. This isn't just luck, it's by design. The underlying blockchain technology is a fortress of security and transparency, operating without a central authority, which means it cannot be easily manipulated or shut down by any single entity. Before we get into the nitty-gritty, I want to invite you to subscribe for more updates just like this one. As a thank you, new subscribers will receive my exclusive Crypto Starter Kit ebook for free. Don't miss out. The knowledge you gain today is your best investment for tomorrow. Let's talk numbers, because in the world of investing, the price chart tells a story. As of today, Bitcoin is holding strong, hovering in a range that has been a battleground for bulls and bears for the past quarter. We saw a significant rally earlier this year, pushing past the previous all-time highs, setting a new benchmark that captured global attention. This surge was largely fueled by a fresh wave of institutional capital and increased clarity on the regulatory front, which we'll discuss later. However, the market has since entered a consolidation phase. This is a period where the price trades sideways, building a new base of support before its next major move. This is a healthy, natural part of any market cycle. This period of consolidation is critical for the long-term health of Bitcoin. It shakes out the short-term speculators and allows for accumulation by long-term believers who are unfazed by temporary volatility. Looking at the on-chain data, we can see that a significant amount of Bitcoin is moving from exchanges into private cold storage wallets. This is a classic bullish indicator. It suggests that investors are not planning to sell anytime soon. They are holding for the long haul, anticipating higher prices in the future. This reduction in the available supply on exchanges creates a supply shock dynamic which can lead to explosive price movements when demand begins to pick up again. When it comes to predicting the future price of Bitcoin, opinions are as varied as they are passionate. However, a growing consensus is forming among some of the brightest minds in finance and technology. Analysts from major Wall Street firms who just a few years ago were dismissing Bitcoin are now issuing incredibly bullish price targets. Some of the more conservative estimates place Bitcoin on a trajectory to reach well into the six-figure range by the end of this decade. They are no longer viewing it as a fringe asset, but as a legitimate component of a diversified investment portfolio, a digital commodity with unique properties that make it highly valuable in our increasingly digital world. These predictions are not just pulled from thin air. They are based on sophisticated models that analyze factors like network growth, adoption rates, and supply and demand economics. One of the most popular models is the stock-to-flow, or S2F model, which quantifies the scarcity of an asset. Because Bitcoin's supply is mathematically capped at 21 million coins, and the rate of new supply is cut in half, approximately every 4 years through an event called the halving, its scarcity increases over time in a predictable way. This model has historically been remarkably accurate in plotting Bitcoin's long-term price trajectory, and it continues to point toward significantly higher valuations in the coming years. Technology visionaries compare its current stage to the internet in the late 1990s, and foresee Bitcoin as foundational infrastructure for a new global economic system. The sheer volume of intellectual and financial capital now aligned behind Bitcoin is impossible to ignore. The smart money is making a clear bet that the digital, decentralized, and scarce nature of this asset will become exponentially more valuable over time. For the average investor, this means the opportunity is still immense. We are far from market saturation, and the journey is arguably just getting started. The question is not if Bitcoin will continue to grow, but by how much. For years, the biggest question mark hanging over Bitcoin has been regulation. The fear, uncertainty, and doubt have caused many market jitters. However, 2025 marked a pivotal turning point. instead of outright bans, leading economies move toward clarification and integration. In the United States, landmark digital asset legislation created a rulebook for crypto companies and investors. That removed a huge cloud of uncertainty, making it safer and easier for large conservative institutions like pension funds and insurance companies to get involved. This regulatory clarity is a double-edged sword, but the positives far outweigh the negatives. Yes, there's more oversight, more reporting requirements, and an end to the Wild West era, but it provides legitimacy and consumer protection. Most people aren't comfortable putting their life savings into a legal gray area. Clear rules paved the way for a tidal wave of new capital, creating a more stable and mature market. Globally, the picture is becoming increasingly clear. We are seeing a divergence in approaches. A handful of nations have embraced Bitcoin wholeheartedly, even making it legal tender to attract investment and innovation. Other countries have established regulatory sandboxes where crypto products and services can be tested and refined. This patchwork creates competitive dynamics as countries vie to be crypto hubs. This competition is healthy. No single country can stifle Bitcoin's growth. The impact of this regulatory thaw cannot be overstated. It's the green light financial titans have been waiting for. Barriers to entry for institutional investors have been dismantled. Custody, trading, and taxation frameworks are now in place. We're seeing a massive uptick in publicly traded companies adding Bitcoin to balance sheets and major banks offering Bitcoin services to high net worth clients. Regulation is no longer the enemy, it's the catalyst unlocking the next adoption chapter, transforming Bitcoin from a niche interest into a globally recognized financial asset. For Bitcoin to truly succeed, it needs to be more than just a speculative asset traded on screens. It needs to be used in the real world by real people and businesses. In 2025, that vision is becoming a reality on a massive scale. Integration into major payment processors and fintech platforms is the biggest change, unlocking millions of merchants. Your local coffee shop and large online retailers can accept Bitcoin as easily as a credit card, with transactions settled instantly in local currency. Layer 2 solutions made this possible, most notably the Lightning Network, which runs on top of Bitcoin's blockchain, enabling near-instant, almost free transactions. It solves Bitcoin's scalability problem and makes everyday purchases practical. Buy a cup of coffee, pay for a subscription, split a dinner bill with a friend. Transactions are faster and cheaper than many traditional methods. This isn't a promise. It's happening now, with capacity and usage growing exponentially. Adoption is surging in countries with unstable economies and high inflation, Argentina, Turkey, and parts of Africa. For millions there, Bitcoin is a lifeline, not just an investment. It protects savings from local currency devaluation and enables low-cost remittances from abroad. For these users, it's financial freedom and empowerment, a way to opt out and join a global open economy. Corporates are moving in too. Household names across industries are integrating Bitcoin, entertainment and real estate. Some use it for international payroll, others hold it as a reserve asset, and many build loyalty programs that reward customers in Satoshis. This corporate embrace signals Bitcoin is a serious, long-term technology. The network effect is in full swing. As more people and businesses use Bitcoin, it becomes more valuable and useful for everyone else. We're witnessing the early stages of a global monetary revolution, and the momentum is only accelerating. The infrastructure is maturing, the barriers are falling, and Bitcoin is transitioning from an experimental technology to essential financial infrastructure. To fully grasp Bitcoin's behavior in 2025, we must look back at the most recent halving event. This is a pre-programmed event baked into Bitcoin's code that occurs approximately every 4 years, cutting the reward for mining new blocks in half. This process is the secret sauce behind Bitcoin's digital scarcity, systematically reducing the rate at which new Bitcoins are created, making the existing supply more valuable over time. The last halving, which took place in 2024, was a monumental event, and we are currently living in its powerful aftershock, a period that has historically been the most bullish for Bitcoin's price, characterized by parabolic increases in the 12 to 18 months following each halving. This pattern has held true for every halving cycle to date, and the current cycle is showing all the signs of following this well-trodden path. The logic is simple: supply and demand. After a halving, the amount of new Bitcoin hitting the market each day is slashed in half. If demand remains constant or continues to increase, the price is forced to adjust upwards to find a new equilibrium. This supply shock is a powerful, predictable force that sets the stage for a new bull market. The 2024 halving was different from its predecessors in one crucial way. It occurred at a time when institutional demand was already at an all-time high. The launch of spot Bitcoin ETFs in major markets had already opened the floodgates for a torrent of new capital. When the supply of new coins was suddenly cut in half, this pre-existing demand had a supercharging effect, like pouring gasoline on a fire. This is why the price rally we saw in late 2024 and early 2025 was so aggressive, and why the consolidation we are seeing now is at a much higher price level than in previous cycles. Understanding the halving cycle is essential for any Bitcoin investor. It provides a long-term framework for navigating the market's seemingly chaotic movements. It helps to tune out the short-term noise and focus on the underlying fundamentals. The halving is a constant, rhythmic pulse at the heart of the Bitcoin network, a mathematical certainty in a world of financial uncertainty. We are still in the primary bull phase of this halving cycle. History suggests that the most dramatic price movements are still ahead of us, as the full effect of the supply crunch continues to ripple through the market, meeting a wave of unprecedented global demand. We have covered a lot of ground today. We've analyzed the current price action. Bitcoin is consolidating recent gains, building a strong foundation for its next move. We've heard incredibly bullish predictions from top financial minds who see Bitcoin as a cornerstone of the global economy. Regulatory clarity is unlocking institutional investment, and we've witnessed real-world adoption exploding. Bitcoin for payments, savings, and financial empowerment used by millions globally. The evidence is clear. It's not if, but when and by how much. We have a confluence of factors: strong technicals, bullish fundamentals, regulatory clarity, growing adoption, amplified by the 2024 halving. This has created a perfect storm for Bitcoin. We're at a unique inflection point in financial history. Early adopter opportunities of this magnitude are rare, offering a chance to position yourself on the right side of a monumental wealth transfer. But it requires more than hope, education, conviction, and a clear strategy. This is your moment to act. The information is out there, the trend is clear. Don't let this opportunity pass you by. Subscribe for continued analysis, get the free crypto starter kit, and once you understand Bitcoin, explore Ethereum and smart contracts. Bitcoin, digital gold and ultimate store of value. Ethereum, building the foundation for Web3. Learn how these networks complement each other as the two pillars of the new financial world. Start learning about Ethereum next. Become a truly informed investor positioned for the digital financial revolution ahead.